What controls already existed before these new laws came into effect this February?
We have never had specific legislation in Kenya that defines how the credit reporting industry would operate and how users of the credit bureaus would engage with the credit bureaus. Now, legislation has been in the works for the last 6 years or so because it required the amendment to the Banking Act, which would facilitate the sharing of information within the banking sector. Prior to that, how companies have been operating is through what you call express customer consent. It's recognized legal jurisdiction that if a customer gives you express authority to share the information with another party, then you can do that. They basically waived their right for confidentiality, and that's what institutions have been using in the past to push that information across to the private credit bureau practitioners.
This new system does not assume a clean slate. It tries to dig up as much historical information as possible on the credit history of the person, and then they proceed.
That is correct. Now, the way the law has been designed, first it came into effect on 2nd February 2009. The law makes it mandatory for all licensed institutions under the Banking Act to report non-performing loans. So as at the time the law comes into force, any non-performing loans on the books of a financial institution have to be reported. So even if that default happened 7 years ago or 10 years ago, it's still outstanding in your books, you must report that. But the problem with that was that it was not able to cover the historical default information, which were not covered by the express customer consent, because customer consent is forward-looking. Any new loans, you can be able to incorporate that. But people who defaulted 2 or 3 years ago, obviously they can't come to the bank and start signing an express consent that will allow information to be passed forward.
Okay.
So the law that has been, the legal regime that has come in is basically to enable the sharing of information irrespective of whether the customer has given consent or not.
Because of things like this, when people want to apply for loans or mortgage or things like that, then it's obviously emphasized that they should keep a good look on their credit report. How often should someone check their credit report?
Now, normally it's recommended that before you apply for any credit facility, go to a credit bureau, the licensed bureaus, and ask for your credit report. Now, the bureaus are required under law to give you your credit report. Once a year, it's free of charge. And then if you ask for a report, they should be able to give it to you on a commercial basis, as in the just a price that they attach to it. And if you have been denied a facility in the last 30 days, a bank denies your facility because of information sitting in your credit report, you can ask for your report for free.
Okay.
So it is possible for you to access the report. But what is important here is for consumers or borrowers to understand that from now henceforth, your activities in terms of your repayment, how you honor your obligations, will have consequences in your ability to get credit in the future. The law is designed in such a way that it carries some punitive aspect to it.
Okay.
If you default, and that is reported as a default, once you pay it off, that information will still remain in your credit file for another 7 years,
7 years
from the date of payment.
Okay.
So it's quite punitive, but that's for those who default.